Ladies and gentlemen, good day and welcome to the SP Apparels Limited earnings conference call hosted by Batliwala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now hand the conference over to Mr. Roshan Nair from Batliwala and Karani Securities India Private Limited. Thank you, and over to you, sir.
Thank you, Peter. Good evening, everyone. On behalf of BNK Securities, I would like to welcome you all for 4Q FY22 post-results conference call of SP Apparels Limited. Today we have with us the senior management of the company, including Mr. P. Sundararajan, Chairman and Managing Director, Mrs. S. Lata, Executive Director, Mr. S. Chenduran, Director, Mrs. P. V. Jiva, Chief Executive Officer, and Mr. V. Balaji, Chief Finance Officer. I would now like to hand over the call to the management for initial comments. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm greetings to all of you present on this call to discuss our Q4 financial year 22 performance. I hope and wish that all of you and your loved ones are healthy and safe. As all are aware that the company has completed the retail hive-off through a slump sale arrangement during 31st December 2021. After the hive-off, SP Retail Ventures is continuing its operations under the subsidiary company, and Managing Director of SP Retail Ventures, Mr. Chenduran, will update you on the latest business developments of the company. As informed in the last call, we are planning to raise private equity or strategic investments in our new retail venture to grow the business and excel in its industry. Now, with regard to the current textile industry, I understand from many that I am getting calls from various investors, shareholders that some ambiguities about this industry, what they see in media and what they hear is that I just want to update you on this. Okay, generally the scenario in textile industry is this: cotton price is going up, due to which the yarn price and in turn the cotton price are going up. That is for sure. I mean, the cotton price has grown by more than double, never in the history before. And that has also affected the increase in the yarn price. So this is a general scenario, there is no doubt about it. And also the coal and the electricity, all the raw materials and the electricity, the prices are also going up. This is definitely there. And also sometimes the pound is not in our favor, something like that, but this has also been under control. So generally from the outsider's point of view, there is a concern about the textile industry, but that's not the case with most of the big players, and especially in SP Apparels. See, because we like to highlight 3 points which are mitigating this kind of a situation. One is our USP is that we are strong in babies products as always, and that's our key strength, still remains key strength, and there is a very high entry barrier for this one. This is one thing which always support us because of our capability. And the second point is we are backwardly as well as forwardly integrated. So this is the biggest advantage for us, especially in the current scenario, because if the cotton price goes up, yes, there will be an impact in our garment costing, but we overall manage it in such a way that we don't lose the order, nor we will take the orders at the negative margin or something like that, because one way or other we will be able to make some money. That is one thing. And also the availability of cotton, availability of yarn is not an issue because our capacity of yarn is fully balanced with our sewing capacity, so that has never been a problem. And also during this crisis time, the cotton quality is not as expected by everyone, but we are able to do a proper mixing and we know what cotton we need to buy for our product. So where again we don't have these quality issues also. So this is something, some of the advantages what we have used our backward integrated facility. And the third one is our manufacturing garmenting facility is that, as I always been telling that, it's a hub and spoke model of manufacturing setup, which means, we have fully hostel factories, fully mix of hostel and local factories. And then there again in the hostel factories, migrants as well as homestay Tamil girls are there. And we also have distant factories, where there is abundant workforce available whom we can recruit and train them. So we have got a different mix of workmen availability and engaging them. So which means if at all there is a problem in one or two factories in terms of available shortage of people, but the remaining factories will take care of everything. So this is something which has been continuously mitigating the risk of ours. And these are the three things which I would say. And then, okay, this is as far as the textile industry is concerned. So with SP Apparel, yes, as I mentioned, you may not have to be having any concern about the business. I thought I will update you on these things. Regarding and I would like to give you an update on the dividend part. Yes, there has been a policy for dividend, and the board has suggested to wait until next board meeting to decide upon the dividend and the quantum of dividend. So I request everyone to wait until the next quarter result and next board meeting. Now I would like to discuss on the segment-wise our performances. Garment division, the financial performance is our garment division revenue for this quarter stood at rupees 220 crores as against 163 crores for Q4 FY21, which is at a growth of 35% year on year. Total revenue for whole year stood at 743 crores as against 534 crores for the year ended 31st of March, 31st March of 21, at a growth of 38%. Adjusted EBITDA of the garment division stood at 20.1% for the current quarter versus adjusted EBITDA of 17.8% year on year. Adjusted EBITDA of garment division for the year stood at 155 crores as against adjusted EBITDA of rupees 108 crores of FY21. With regard to our current order book stands at rupees 327 crores. Our current order book stands at rupees 327 crores. And with regard to the new customer additions, yes, as we mentioned before, we have shortlisted. We are looking for two customers to add. Both of them, as I mentioned last time, they are global presence and they have stores all over, and we'll be working directly with the brand. So the business will start hopefully in the next 6 months' time. By then, we will also have adequate capacities to accommodate for their orders. And capacity utilization is around 72%. So before going to the capacity utilization, I would also like to highlight that regarding free trade agreement, FTA with UK, Europe, and Canada is, it is going very strong and steady. And most probably by October, I think there will be a conclusion of FTA between the UK and India. This will be a very great advantage, and we will be at par with any other duty-free countries like Bangladesh and Sri Lanka, etc. Then we will have a same level playing. This is also one of the reasons why our existing customers as well as new customers are looking to place business with India, and where again for the babies they would prefer only SP Apparel Limited. Then regarding capacity utilization, this is around 72% currently and is expected to increase by another 10 to 15% going forward. So which means we expect around 82 to 85% in the next few quarters. The new customers are looking for bigger factories, and hence we are planning to add one more factory in the down south in this year. And with regard to spinning, as explained to you all, our expansion of 3 frames, that is 3,600 spindles, is completed currently and have started yielding production. Further, as instructed in last call, to mitigate the risk of availability of quality on and consistency in supply, we have tied up with a mill on the conversion basis so that the supply is without any volatility. The financial year, our spinning plant has demonstrated well both in terms of margins and production. It has contributed significantly to the margins. With regard to the cotton prices for spinning, until now the cotton prices are steadily increasing, and the various our association and talking to central government and the state government to intervene and see that it is some actions are being taken. Until then, the prices continue to increase. We hope that in the next 2 months' time, there will be definitely an arrest in the further increase, and probably the price will start coming down after 2 months' time. This is with regard to the spinning. And to go back to the garmenting, I want to inform, because one of the shareholders had questioned about the quantity. So what for the year completed financial year 22, we have done 3 crore pieces. What is it? How is it? No, the pieces not here. 50. Sorry. So the number of pieces what we have produced last year shipped is 5 crore pieces for the year 21-22, and the order book is 3 crores of pieces on hand. That is 327 crores in value and 3 crore pieces in volume terms. And going back to processing division, in spite of the coal availability and the rise in the input cost, our processing division continued to perform well and with good utilization levels and contributing to the margin effectively. Our SP Apparels UK division has seen a lot of disruptions in supply chain, majorly due to the third wave in the UK and Europe. Non-availability of adequate containers has also interrupted the supply chain and disturbed the revenue for the current quarter. Revenue for the quarter stood at GBP 2.1 million as against 2.2 million year on year last year. Current liquidity, our liquidity position is strong, and we have serviced all the debts up to date. With regard to retail division, I would request Mr. Chenduran, the Managing Director of SP Retail Ventures, to brief you on the performance of the retail division and its updates. Thank you. Over to Chenduran.
Thank you, Chairman. So I'm Chenduran, Managing Director of SP Retail Ventures. This is the 100% subsidiary of SP Apparels, wholly for retail. So as you know, we hold the license for the brand Crocodile, which was part of a division, a retail division, SP Apparels. Currently, the license is with SP Retail Ventures. On the numbers, I'm sure CFO will be able to explain in terms of the value of the slump sale. So in terms of retail, last 2-3 years has been very difficult, where in terms of COVID and lockdown, a lot of discontinuity in terms of the supply chain as well as with the closure of a lot of stores. But this financial year onwards, it has picked up. It is very positive now. So to give a brief update on the retail front, apart from Crocodile, SP Retail Ventures also has the license of a brand called Head, which is one of the premium tennis brands. The brand is very well top 3 in terms of tennis and the skiing, and we have the license for the brand for the sportswear as well as the footwear of Head in India. Apart from Head, we've signed a 15-year royalty agreement with exits in between, mutual exits. And apart from that, SPRVL also holds the license for UK-based kidswear brand, a premium kidswear brand which is based in the UK called Angel Rocket. Again, it is licensing agreement for now, but we intend to acquire the brand in the future. It is a premium kidswear brand which is completely designed in the UK for the global market. It has a huge presence online in UK, Europe, and the Middle East in offline stores. And in India, we are present currently in around 70 large format stores like Shoppers Stop, Lifestyle, Central, Iconic, Capsons. Apart from that, in all the online platforms like Myntra, AJIO, FirstCry, even Nykaa in India alone. There is a standalone store, exclusive brand outlet planned in Bangalore. And apart from that, we're also planning to increase the footprint in terms of large format stores as well as EBOs. That's it in terms of the update from the retail side. Over to CFO, Mr. Balaji.
Good afternoon, everybody. Thank you, Chairman and Director, for the brief update. Regarding the financials, I would just like to update you on the consolidated financials for the quarter. Adjusted revenues stood at 258 crores as against 193 crores year-on-year. Adjusted EBITDA stood at 45.75 crores as against 25.16 crores year-on-year. PBT stood at 36.58 crores as against 15.19 crores year-on-year. PAT stood at 25.25 crores as against 10.56 crores year-on-year. EPS for the quarter stood at 9.83 versus 4.11 year-on-year, which is a 240% increase. On a standalone financials for the quarter, adjusted revenue stood at 219.92 crores versus 163 crores year-on-year, which is an increase of 35%. Adjusted EBITDA stood at 20.1%. PBT stood at 36 crores as against 15.98 crores year-on-year, and PAT stood at 25.26 crores as against 98 crores year-on-year. 9.8 crores year-on-year. EPS for the quarter stood at 9.83 versus 3.82 year-on-year, which is a 257% increase. Consolidated financials for the whole year. Total revenue stood at 867 crores versus 653 crores year-on-year, which is an increase of growth of 33%. Adjusted EBITDA stood at 153 crores as against 107 crores year-on-year, which is an increase of 43%. PBT stood at 114 crores as against 59 crores year-on-year, which is an increase of 94%. PAT stood at 84.6 crores versus 43 crores year-on-year, which is a growth of 96%. EPS for the whole year stood at 32.96 as against 16.8 year-on-year, which is a 196% increase. 96% increase. Standalone financial for the whole year. Total revenue stood at 742 crores versus 536 crores, which is an increase of 38%. Adjusted EBITDA stood at 20.9%. PBT for the year stood at 113 crores versus 53 crores year-on-year. PAT stood at 83.2 crores versus 38.68 crores year-on-year. EPS on a standalone basis stood at 32.38 versus 15.06 year-on-year. Please be informed that our credit rating has been upgraded currently to AA negative stable for the long term, and short term we have been upgraded to A1 plus stable. With regard to the debts in the books, on a standalone basis, we have a gross debt of 173 crores and a net debt of 117 crores. In terms of a consolidated basis, we have a gross debt of 197 and a net debt of 141 crores. On the working capital front, our inventory on a standalone basis stood at 332 crores, and on a consolidated it stood at 332, and on standalone basis it stood at 295 crores. On receivables, consolidated basis, our receivables were at 108 crores. On a standalone, we are 162 crores. On payable front, on a consolidated basis, it is 118 crores. On a standalone basis, payables is at 88 crores. Increase in the inventory level is mainly due to increase in the cotton prices and other costs of material. The increased cost of escalation has increased the carrying cost in the inventory, and without increase in the working capital limit. And this shows that the strength in the company and its liquidity. All the other informations are available in the presentation, and we can get into the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Nirav Savai with Abacus Investments. Please go ahead.
Thanks for the opportunity. So my question is regarding this SP UK subsidiary. Now, we have been doing this business for a long time. So how do we see the future growth trajectory, and what are the kind of working capital requirements we have for this business?
So SP UK, we have started working with SP UK since 2016 onwards. And it's 6 years now, and we cannot consider FY20 and 21 because of the disturbed COVID issues. We cannot consider that. But it's purely a trading model where we are looking at a revenue of close to 9 million next quarter, 9 to 10 million. And it's purely back to back in terms of POs. So working capital should be hardly 45 days there.
Okay. But over a period of next 2-3 years, do we see this going 2x or even bigger than that?
Yes,
working capital?
No, I'm saying in the overall terms of size, if we see the revenue by.
As I've been explaining before also, so unfortunately 3 years have been affected. 2021, even 22 is because of the supply chain issues, and they reopened the stores and the business picked up and the stock and everything. So it had an after effect for another 1 year. So now it's getting back on track. So the business model is it is purely based on the reputation of the company SP Apparels, which is very well known to the UK and Ireland market. So as I always mentioned, some of the brands which they work in a different model, which means they want everyone landed delivery in the sense. They want the suppliers to do the designing, the sourcing, compliances, quality, and delivery to their warehouses. So this kind of service is something which most of the companies the retailers are doing, and for them our company is the best app for this kind of full service and as full service vendor. So there is a lot of chances that already we have 3 customers. So probably with these 3 customers, we can easily double the business in the next 1 or 2 years. I would say 2 to 3 years time. So it's a good opportunity for this business model, which is taking away any of our the India business. It is an additional extra business.
Okay. And so what would be a hedging policy? We have seen a lot of volatility in pound. So would there be any impact in the first quarter?
On this, due to this yarn price, you mean the cotton price?
No, I'm saying in the pound, would there be any impact of currency because of extreme volatility in pound in the first quarter? And what is a hedging policy? Is there something which we practice?
We have very clear forex policy. I think let CFO explain.
Yes.
We have a very clear forex policy where we cover 80% of our orders within 6-7 days from the date of receipt of the order, so that we cover the volatility in terms of any currency fluctuation. And whenever we do costing with the customer, we work on the current prices and work accordingly. So there cannot be huge volatility because of the currencies.
Okay.
At least next couple of quarters.
Right. And sir, the way the cotton prices have gone, in our category also, would there be a big impact? Because, this is infant wear category which I understand is lesser commoditized than, the adult wear. And also, what can be the potential impact, or how difficult it is to take price hikes in this segment?
Yes.
So we have given a guidance in terms of percentage anywhere between 18 to 20. And I think we would like to stick between 18 to 20 in terms of the guidance. If at all there is any pressure because of the cotton prices fluctuations, it could have a pressure to an extent of 100, not beyond 100 bits on the margin. So only 100 bits could be a risk here.
Right. And sir, is there any expansion plan going ahead as far as sewing machines are concerned for next couple of years?
Yeah, if you recollect in the chairman's speech, now we have a couple of customers where they are looking at new facilities or facilities with a bigger capacity. So already the existing capacities are tied up with the existing. So we are looking at one factory down south which could come up with a bigger capacity. That may happen towards the end of the financial year.
Okay. So end of FY23, we might see this new facility coming on stream.
Yeah.
And so how many machines we would be adding in that? Anything if you can give some number?
So we cannot predict it now, but the capacity should be at least 2,000, 2,500 machines at full utilization levels because we would like to go in phases there.
Okay. And so what would be the capex behind this new facility which we are planning?
It could be anywhere between 50 to 60 crores in terms of the whole project,
Including machines. No, it's not 2,000 machines, it's about 1,000 machines.
1,000 machines. Okay. All right, sir. That's it from my side. Thank you very much.
Thank you. Our next question is from the line of Mr. Resham Jain with DSP Investment Managers. Please go ahead.
Yeah, hi. Good evening. So I have a couple of questions. First of all, congratulations on good set of numbers. So first is on garment business. Our earlier guidance of around 1,000 crores in the garment export business, does that guidance still holds true for FY23?
Yeah, I think we have not taken back any guidance. We are working towards 1,000 crores of revenue for the garment next year, FY23.
Right, great. And what you mentioned in your initial remarks, is it correct that despite several headwinds which we see in the industry, the margins could be, at least in the near term, we have the visibility of 18 to 20% with 100 basis point differential in your core business. Is that a fair understanding?
Yeah, just now I said there could be, we have been guiding for 18 to 20, but because of the unusual cotton prices, there could be a pressure in the margin to an extent of a percentage.
Right. Understood, sir. Great. And my last question is on SP Retail, the new subsidiary which you created. Just to understand how are you approaching this business, because last 5 years, if you look at this business, and one can argue that 21, 22 are affected years because of pandemic and all. But on a base of 50 odd crores, this business have hardly grown in the past. 50 crores have moved to 82 crores in FY19 in a very small base. So clearly there has been, the scalability has been an issue in this business. And now we had this Crocodile brand, but we are now adding another 2 brands here. So how are we planning to deploy capital in this business, given the not so great track record in the past? If Mr. Chanduran can help in terms of how the capital employed will be in this business and what kind of risk measures, because on the profitability side also over the last 5 years, if we look at the cumulative EBITDA, it's actually negative. So just the thought process on scalability of this business and also the risk management. Yeah, that's it from my side.
So this is Chanduran. Thanks, Resham. So in terms of the past 5 years, there have been a lot of ups and downs in terms of the inventory management. There have been certain errors and mistakes where the stores opened or we closed some channels. And if you just ignore the last 2 years because of COVID, the earlier 3 years, there were a lot of corrections that we had to do internally, which we knowingly did. But at that point of time, even before COVID, the plan was to achieve a 100 CR top line in Crocodile alone. And unfortunately, we had the situation where we couldn't do anything, but we've still achieved a significant top line in spite of losing 4 months. So effectively, last financial year, we lost 5 months if we don't take into account the weekend lockdowns, which are again peak for retail. We lost a couple of months with the transition. We've upgraded the SAP in terms of from migration from this entity to the other entity. There was a lot of hindrances, but as of today, as it stands, even from April onwards, we've been on track to achieve the number that we proposed to achieve. So in terms of scalability, it has always been possible, but internally there had been issues earlier, but that is precisely what we worked on. And last 2 years, in terms of inventory also, we've considerably reduced to an extent of 10 CR. The inventory has come down, which is not by liquidation. We've effectively used the inventory to achieve the numbers, and we've reduced the buying. So going forward on the capital terms as well, with the existing inventory, by improving more in the core business, core products, we will be managing the capital, working capital and the inventory. So if we do only fashion, then we have to keep changing every season. But the contribution from wholesale distribution, which is going to be higher, is going to help us in terms of effective utilization of the inventory and the capital. And in terms of the new brand also, where we've not taken any additional overheads in terms of teams or marketing or any such thing. So, but they've already started giving us revenue. So that is going to help in terms of the overall overheads for the retail as a entity.
Okay. So in 4-5 years plan, if you can share how scalable this business can become?
I don't know if I can
give the losses which we may see in the initial period, or it will be break-even kind of business at least for the first 2 years.
It will definitely be a break-even this financial year. It has already started that way. And to be very honest, if there is no unprecedented issues with COVID or lockdowns again, every month is going to be definitely EBITDA positive. And going forward, I don't know if I can give a guidance on a 5-year plan on a number, but we'll definitely be growing 50 to 60% every year.
Okay. Yeah. Great. Thank you.
That's a good with the new brands also, so it looks very progressive from now onwards.
Okay. Thank you.
Thank you.
Thank you. Our next question is from the line of Forum Macken with Equity Capital. Please go ahead.
Hello, sir. Congratulations on a great set of numbers. I just had a couple of questions. Sir, could you share the realization per piece number for the quarter?
Should be close to 125 rupees, 126 rupees per piece.
Okay. And how was that last quarter?
Last quarter, it was around 104 or 114, sorry. Last quarter.
So it's gone up by almost 10%.
Yeah.
Okay. So, sir, what is the reason for the improvement in gross margins Q on Q, and what would be the impact in Q1 on a margin since we are sitting on a high cost inventory?
See, all the inventory which the company is holding or is carrying under work in progress is purely towards the orders in hand. In case my order book is 327 crores, I need to have at least 180 crores of inventory under WIP, where I have already taken the cotton, yarn, and completed the dyed process. So the process in terms of work in progress is purely towards my orders in hand. And in terms of my raw material, because we are backward integrated, our inventory as both as cotton and yarn in our spinning divisions, and dyeing plant is also considered as raw material, and the carrying cost at the current cost should definitely be on the higher side. On the margin front, current quarter there is a betterment in terms of the margin. Is purely because of our spinning division contributing on the margin, because we were carrying cotton at average prices, better average prices previously, which is giving us better margins for the current quarter. Going forward, our holding, we have come down to 45 days of holding, so the margins could have some hit at the spinning division level.
So would that be a temporary phenomenon, or it could last for the whole financial year?
I'm not sure. The cotton prices, only God can say how it's going to work.
Right, sir. So in a cash flow statement, there's a 6 crore impact due to some forex loss. Could you just explain what that is?
That is not forex loss, that is gain, mark to market gain of 6 crores.
So we've booked that gain.
Yeah. And in our presentation, you could see that the margins are getting adjusted towards that.
Right. And so have we started operating the second shift?
Actually, in one of our factories, in a small level, like one line we have started. Slowly we will be increasing one by one, and we are trying to add the second shift in one more factory also. That will happen next month.
Okay, so by next month it should be operational.
Yeah. We have already started operating one line, and slowly we are increasing one by one. In one factory, we have started running the second shift for one line, and it's on a trial basis. And same way, what she says, next month we will be starting one more line in another factory. So probably in the next 3-4 months' time, the number of lines in those factories will be increased.
Right. And so we spoke about adding 2 new customers. So what could be a revenue potential from those customers?
I think they are big brands. Their volumes are unlimited, and they are focusing us for the babies and kids. So it all, like in the first year, we will be just starting on a trial basis. So the real business starts from next year, 23-24. By then, our new factory will be also ready for the new customers. So from say April 23, the business will take off for those two customers.
Okay. Okay, sir. Thank you so much.
Thank you. Our next question is from the line of Rishabh Mundada with ICRA. Please go ahead.
Hello. Yeah, can you hear me?
Yeah, please go ahead.
Yeah. So I just wanted to understand this, since this cotton prices have been increasing. So in all likelihood, the margins in Q1 of FY23 would be impacted if the company is not able to fully pass on the price hikes to customers.
Yes. See, it's like this, we always factor in the cotton prices in anticipation, which means we add another certain percentage of increase in anticipation and do the costings, and we are able to get some via media prices. So this is how we are managing it now, because even the customers know that all over the world this is the situation. So it's not only the price of SP, it's the price for everybody. So they are cooperating, and the one good thing is that the customers, the retailers have started putting up their prices also. So which is a good news for us, because unless they increase their selling prices, how can they pass on some prices to us? So that has started happening now. So I think the whole industry has started accepting the current situation until the situation restores. So that's the current scenario.
Okay. So sir, you mean to say you have taken price hikes in current quarter?
Sorry, you have to come back on your question.
Sir, you mean to say that you have taken price hikes in the current quarter?
Yeah. So whatever orders we have taken previously is going to be shipped for the current quarter, and you expect the prices, the yarn covered at that prices during
the person you are speaking with has put your call on hold. Please stay on the line. நீங்கள் பேசும் நபர் உங்கள் அழைப்பை ஹோல்டில் வைத்துள்ளார். दयவு செய்து लाइनिल काத்திருக்கவும். आप जिस व्यक्ति से बात कर रहे हैं उसने आपकी कॉल को होल्ड पर रखा है. कृपया.
Hello.
Yeah.
Sorry, sir.
Call on hold. So
able to hear you. You were telling something that goods are about this goods are shipped.
The goods are being shipped in Q1. We have factored in a certain increase of the yarn prices, but the fact was slightly that the yarn price has gone up more than what we factored in. So in this quarter one, there will be an impact to some extent, say about 1%.
Okay. But sir, let's say hypothetically, if the cotton prices remain high for another 2 quarters, so from Q2, so we will be able to pass on these prices to our customers?
Yes, we are trying as much as possible, and the customers also understand the situation, and that is why I said that they were forced to increase their retail prices. So there is a room for passing on some prices to us. So I think we should be able to manage the same 18 to 20%, with maybe an impact of about 1% as CFO mentioned.
Okay.
Sure. Overall, yes.
One more point, sir. In terms of this, are we seeing any impact of inflation in this Europe markets on the demand front? Let's say over 2-3 quarters.
In terms of the demand, there is no, as Chairman was indicating that the FTA is coming the China factor, like the ships are not able to leave the ports from China because of the COVID lockdown. So many factors, and demand is definitely far better comparing last year. So there is no big impact on the demand front.
Okay. Sure, sir. Thank you.
Thank you. Our next question is from the line of Aman with Carnelian. Please go ahead. Mr. Aman, your line has been unmuted. You can proceed with your question.
Hello.
Yeah.
Hello. Am I audible?
Yeah.
Yeah. So, sir, as I can see, like during this quarter, we have basically exported around 1.5 crore garment pieces. So, do we expect that for the next year we would be doing 6 crores pieces at least, like what we did during the peak of FY19?
Current year we have done 50 million pieces, and we are expecting it to increase by 10 to 15% next year. As you heard Mr. Sundar talking about the future and the number of pieces, so we are looking at definitely increasing by 10 to 15% in terms of the volume.
Okay, noted. So my second question was on the labor side. So we had previously guided that we are basically adding around 300 labor per month, out of which we are basically planning to retain around 200. So how has that been going on? Like, are we facing any issues, or is that on track right now?
Yeah, labor front, as we committed, there was an inflow of 200 to 300 people until last month. Due to some policy changes in Orissa part, there was a less inflow expected this month and next month. So again, from next June onwards, definitely July onwards, we will be getting an inflow of 300 as we committed. So regard to capacity commitment, as we committed, we will be able to achieve the machines what we have already committed.
Okay, thank you. That was it from my side. Thank you.
Thank you. Our next question is from the line of Samir Palod with Home Fund Advisors LLP. Please go ahead.
Yes, hi. Am I audible?
Yeah.
Thank you for the opportunity, and congratulations on a very good set of numbers. Just some clarification, sir. I'm a little new to the company. So as far as the two sort of subsidiaries are concerned, you mentioned that the Indian retail business is been hived off into a subsidiary, and there you will look to basically raise private equity or strategic capital. So there won't be any capital employed from the parent company into that business. Is that understanding correct?
So for the new retail ventures which has been hived off, there we are transferred on a slump sale consideration of 53.5 crores, which will sometime be converted into equity at some point of time. And when private equity is joining us, then that will help them grow their business.
And I understand, but there won't be any. So apart from this 53 crores which will get converted to equity at some point in time, there's no plan to additionally invest more money into that subsidiary. It will come from external sources, either private equity or strategic. Is that correct?
Correct. Until as of today, we feel that whatever is invested into is enough, and we would like to partner with somebody like a private equity or a strategic investor to take the business to the next height.
Sure. So what does SP UK actually do?
SP UK is purely a trading company where whatever orders which we are not able to take because of the quantities of the order size, SP UK takes the order and gets it outsourced somewhere else and gets it shipped to the customer. It's purely a leverage on the.
In fact, as I mentioned before, there are certain small retailers who would not like to do the sourcing or quality directly because of the cost budget involved, and so they would like to have some local importers, full service vendors who can do the designing, sourcing, compliances, and the shipping, everything quality. So this, in order to serve those small retailers, I mean not small, very medium size, as well as those who want full service. So our UK office will approach them, and they will do the designing, present to them, and get the order booking, and they can source it from anywhere in the world. They can source from Bangladesh, source from India, source from anywhere, Sri Lanka. So that it is
not source from SP Apparels, the parent at all.
Sorry?
SP Apparels, the parent, there is no sourcing from SP Apparels in India.
It will not source from SP Apparels here. They will source directly from other factories, not us.
Okay. Sir, second question is, sir, I don't know if I heard you correctly. You said there is about a 350 odd crore order book for about 3 crore pieces. Is that number right?
Yeah, close to 3 million pieces, 30 million pieces.
Sorry, come again?
Close to 30 million pieces, he said.
For about 350 crores. So isn't there a dramatic drop in the per piece value?
So it's only a rough number. In terms of quantity, I think I can share it when we are able to communicate through mail. I will communicate through mail on the correct number pieces.
Actually, the value is right at 327 crores. So the average price now is 135 rupees. So you can calculate the pieces.
But last year you did 5 crore pieces for about 750 crores of sales.
750 crores of revenue is along with all the other operational income, exchange gain, the duty drawback, and all put together. So the number what I am talking is purely on the export front.
Okay, but in the last quarter you mentioned that you are doing 160, 170 rupees a piece in one of the earlier questions. So I'm just trying to figure out realization. I'm just trying to get a good sense whether it is moving up, it remains stagnant.
Hello. Last year, FY22, the garment sales is 578 crores, and we shipped exports alone.
All put together 740.
Correct, but we shipped 5 crores, so it is 160 rupees.
170
115.
So actually the sales we are talking about is only export sales, but you are comparing with the all other income also. So that is the difference. If we compare exactly with the only the sales part, the growth rate is about 20% it is.
Sorry, the growth rate of per piece realization?
1 second, let me understand. Okay. See, last year the the sale value of the export is per piece is 116 rupees for 5 crore pieces.
Is it 116 rupees?
Yes.
Okay.
sales எவ்வளவு
78 divided by 50 million pieces.
570 divided by 5 million pieces.
So how do you 517 crores and your total sales garment exports
is 578 crores, correct? No, the sales of garmenting is 578 crores, leaving spinning and dyeing revenue apart. Only export division, garment export. And divided by 5 crores is 115.